More than 2 out of 3 Americans say that budgeting better is one of their top priorities. And yet, only 14% of Americans actually use a daily budgeting tool. That's not a coincidence. It's a design problem. Budgeting apps fail for the same reason diets fail. They rely on daily willpower applied to a system of constant micro-decisions. Track every coffee, categorize every purchase, stay within your dining out allocation, review your entertainment bucket, reconcile your accounts, compare this week to last week. The cognitive overhead is enormous. And the moment you fall behind, read one busy Wednesday where you didn't log 3 transactions, guilt kicks in, engagement drops, and within 90 days, the app is sitting on your phone unopened, still sending notifications you've trained your eyes to skip. Wallet Hub found that 74% of Americans with a budget say increasing costs are their biggest challenge. But costs aren't the problem. Attention is. The budget doesn't fail because you don't have enough money. It fails because you don't have enough bandwidth to manage a system that asks for your attention every single day. So here's the question. What if you didn't need a budget at all? Not a better budget, not a simpler budget, not an app with a cleaner interface? What if you replace the entire concept of tracking expenses with a system that works without you watching it? That's what this video is. 1 page, 4 numbers. A financial plan that runs on autopilot and outperforms every budgeting app on the market, not because it's smarter, but because you'll actually use it. Here's the 1 page. You can write it on an index card. Line 1, your monthly take-home income. Not gross, net. The number that hits your checking account. For a household earning $85,000 gross, that's roughly $5,500 per month after taxes, depending on your state and deductions. Write it down. 1 number. Line 2, your fixed costs. Rent or mortgage, car payment, insurance, minimum debt payments, utilities, the charges that arrive whether you're awake or not, add them up. For the average American household, this is roughly 50 to 60% of take-home income. On $5,500, call it $3,100. Write it down. 1 number. Line 3, your automatic wealth transfer. This is the number that leaves your checking account the day after payday and goes into an investment or savings account before you have a chance to spend it. The target is 20% of take-home income. On $5,500, that's $1,100. If 20% is impossible right now, start at 10%, $550, and increase by 1% every 3 months until you hit 20. Write it down. 1 number. Line 4, your remainder. Take-home income minus fixed costs minus automatic wealth transfer. On our example, $5,500 minus $3,100 minus $1,100 equals $1,300. That $1,300 is yours. Coffee, dinner, clothes, entertainment, hobbies, random Amazon purchases, whatever you want. No tracking, no categories, no guilt. Spend it however you like because the wealth building already happened on line 3. That's the plan. 4 lines: income, fixed costs, automatic transfer, remainder. Everything above line 4 is structure. Everything on line 4 is freedom, and the entire system depends on one thing. Line 3 is automated and non-negotiable. Now let me explain why this works better than any budgeting app, because the advantage isn't simplicity, it's behavioral architecture. Traditional budgets work backward. They start with your spending, categorize it, compare it to targets, and then try to reduce it. This approach requires constant monitoring and constant decision-making. Every purchase is a micro-choice. Does this fit my budget? Am I over in this category? Should I shift money from groceries to dining out? Each decision depletes willpower, and willpower is a finite resource. By the end of the day or the end of the week, decision fatigue wins and you stop tracking. The 1-page plan works forward. It starts with your wealth transfer and makes it automatic. The savings decision happens once, when you set up the transfer. After that, there are no decisions to make. The money moves before you see it. The remainder is yours. You can't overspend at your retirement because your retirement money already left. This is the same principle that makes 401k contributions work. Most people who contribute to a 401k don't think of it as saving money. They think of their salary as the number after the contribution. The deduction is invisible. That invisibility is why it works. The 1-page plan applies the same invisibility to the rest of your financial life. Here's what the math looks like over time. Using our $5,500 take-home example with a $1,100 monthly automatic transfer at 7% annual returns. After 5 years, $76,800. You've contributed $66,000 and earned $10,800 in returns. After 10 years, $190,000, you've contributed $132,000 and returns have added $58,000. The growth is starting to accelerate. After 15 years, $356,000, your contributions are $198,000, but returns have added $158,000. The returns have nearly caught up to the contributions. This is the inflection point. After 20 years, $594,000. Returns have now exceeded contributions. Your money is generating more wealth than your labor is. After 25 years, $932,000. After 30 years, $1.42 million. On a household income of $85,000 gross, with zero stock picking, zero market timing, zero spreadsheets, zero daily tracking, just one automatic transfer. Set up once that ran for 30 years while you lived your life. Now, I know what the objection is. $1,100 a month is a lot. I can't do 20%. That's fine. Do 10%. $550 a month. Same math, smaller numbers. After 20 years, $297,000. After 30 years, $710,000. Still life-changing. Still enough to retire with dignity. Still built on autopilot or start at 5%. $275 a month. After 30 years, $355,000. Not $1 million, but $355,000 more than doing nothing, which is what most people accomplish with their budgeting app before abandoning it in March. The percentage matters less than the automation. A 5% automatic transfer that runs for 30 years will outperform a 20% manual budget that gets abandoned in 90 days. Every time. Because the math of compounding doesn't reward intensity. It rewards consistency. And automation is the only reliable form of consistency. Let me address the categories objection because it's the one thing traditional budgeters will push back on. If I don't track categories, how do I know where my money goes? You don't, and that's the point. Because knowing where your money went doesn't change where your money goes. How many times have you looked at your monthly spending breakdown, felt bad about the restaurant category, promised to do better next month, and then spent the same amount? The knowledge doesn't produce the behavior change. The structure does. The one-page plan doesn't need categories because the wealth transfer is pre-committed. You can blow your entire remainder on restaurants and your retirement is still funded. You can spend zero on restaurants and your retirement is still the same number. The remainder is judgment-free because the judgment already happened at the system level. This is what most budgeting advice gets backwards. It focuses on the visible spending, the lattes, the dinners, the subscriptions, because that's where the drama is. But the invisible spending, the percentage that does or does not get automatically invested, is where the actual wealth outcome is determined. Fix the invisible part, and the visible part can take care of itself. Here's how to set this up in under 30 minutes. Step 1, open a separate account, high yield savings or a brokerage account at any major firm. This is where line 3 goes. The account must be separate from your checking to create the psychological distance that prevents casual withdrawals. Step 2, set up an automatic recurring transfer from your checking account to this new account. Date, 1 day after your typical payday. Amount, whatever percentage you can sustain. If you don't know, start at 10% and adjust after 3 months. Step 3, delete your budgeting app. Not because it's bad, because it's unnecessary now. The structure replaced the tracking. You don't need to know that you spent $47.30 at Target on Tuesday. You need to know that your wealth transfer happened on Friday. One number, once a month, done. Step 4, write the one page. Income, fixed costs, transfer, remainder. Tape it to your fridge or put it in your phone's notes. Review it once a quarter. Not to track spending, but to ask one question. Can I increase line 3 by 1%? If the answer is yes, increase the automatic transfer and forget about it for another 3 months. That's the whole system. No daily tracking, no category guilt, no reconciliation, no decision fatigue. One page, 4 numbers, one automation. Now, let me show you why this matters beyond the math. Nearly 1 in 5 Americans admit they aren't honest with themselves when making a budget. That's not a moral failure. That's a design failure. The budget requires you to confront every bad decision in granular detail, and human brains are wired to avoid that confrontation. We underestimate our spending, we round down, we conveniently forget the gas station snack and the parking fee, not because we're liars, because the system demands a level of self-surveillance that our psychology was not built for. The one-page plan doesn't require honesty about your spending because it doesn't ask about your spending. accounting. It asks one question: did the transfer happen? Yes or no? Binary. No room for creative accounting, no categories to fudge. The money either moved or it didn't. And since it's automated, the answer is always yes. This is the fundamental insight. You don't need more information about your money. You need a better architecture for your money. Information without architecture is just guilt. Architecture without information is a system that works. Two people earn the same salary. Person A downloads the top-rated budgeting app, spends an hour setting up categories, tracks diligently for 6 weeks, then slowly stops logging, feels bad about it, and ends the year with the same savings they had last year. They have a lot of data, they have a lot of guilt, they have very little progress. Person B spends 30 minutes setting up an automatic transfer. They never open a budgeting app, they don't know how much they spent on groceries last month, and they don't care. But every payday, 15% of their income silently moves into a brokerage account that they check once a quarter. After 5 years, they have $76,000 in invested assets. After 10, $190,000. Person A has information, person B has wealth, and the difference between them isn't knowledge or discipline or income. It's architecture. 1 page, 4 numbers, 1 transfer. That's all wealth requires. Everything else is decoration. I'm not a financial advisor, lawyer, therapist, or any other licensed professional. The content on this channel is for educational and entertainment purposes only. Everything shared here reflects my personal opinions and should not be taken as financial, investment, legal, medical, or relationship advice. Any stories, examples, or characters used are composite illustrations meant to explain ideas, not to represent real people or specific situations. Real-life outcomes vary widely because everyone's circumstances are different, and any statistics referenced may come from studies with limitations and may not apply to every individual. Always do your own research and consider your full situation before making important decisions. When needed, consult a qualified professional who understands your personal circumstances.